All right, this is a weekly video for coffee futures, the September contract, and that is what's reflected on these longer term weekly charts. It's the high volume contract right now. Let me go to the newsletter itself, and you can see I've got, in fact, I just showed you this same chart formation in the software program. 116.86 is our ceiling really through summer, through August. We've come close to testing it. 113.75, by the way, precedes it. You'll see that on the right here. That's a session containment level. You could call this a multi-week level as well, and the start of a wide range of significant resistance up to 116.86 that can absorb buying through August. And in fact, the next, say, 2 to 3 weeks, given high volatility, 3 to 5 weeks at the most, should actually yield 102.46 to 103.53. These structures are merged right now. They kind of pull apart from each other as we continue into later July, but they can actually absorb weekly selling pressures. Overall, holding below this 113.75 to 116.86 region, and I'll show you 113.75 in a moment, does allow full bearish rotation back into, let's take a look here. I'm going to jump around some of these charts. Okay, there we have it. Does allow full bearish rotation down to 85.20. Now, it's not a signal right now. It's just that if you're a big picture long-term trader, you should know that having essentially come very close to testing this long-term resistance area. Well, we actually did test 113.75. I'll show you that in a moment. The reason I'm not crowding this is because, if you're a day trader, 113.75 is a good point to play, but it is the beginning of a wide range of resistance for short-term traders up to 116.86. 116.86 is the breakout point to the upside, but we've pushed into this zone, and now that we've done so, the market is vulnerable to, over the next 2 to 3, 3 to 5 weeks at the most, slipping back into this 102.46 to 103.53 area. And in fact, 85.20 in reach over the next 2 to 3 months, perhaps. We do need to close the week below 102.46. I don't see that happening this week. But if, say, by the end of next week or the next 2 to 3 weeks, we close below this 102.46 formation, then the market should continue south through August down to this 85.20 area. Over the following, possibly within 3 to 5 weeks, this area can absorb quarterly selling pressures when tested. And it is also the area to settle below for signaling this long-term support level at 68.71 within another couple of months. This is almost a moot point. I'm just throwing it out there for your own perspective, that this is an area that, if tested, say, into the fourth quarter, could certainly contain selling well into next year. But I don't see that happening right now. Right now, the way I'm going to characterize this market is we're in a two-sided framework through the balance of July between 116.86 to the upside and 102.46 to the downside. And overall, though, as I just mentioned, this 116.86 is much more significant, and having essentially come close to testing it, you should allow for the 85.20 area that I just showed you a moment ago, say as we continue into August, September trade. Allow for. And then if we close below 102.46 at the end of this week, that's actually indicated, and you should be short the market for the following 3 to 5 weeks or longer. Now let's take a look at some of these other levels. I'd mentioned 113.75, and let me show you here that I've just has at the session containment level. 113.75 is in itself a long-term channel structure. We did push through it last week, but we didn't test that 116.86 formation that I showed you a moment ago. But if we closed above, let's go back to here. If we close above 116.86 this week, not only is that a buy signal over this structure, but it's a buy signal over 113.75. And then I would expect over the next month or two, 132.38, where this market can actually bottom out into the, can top out into the fourth quarter. Now, just so you know, if we close the week above 116.86, 132.38 is a 1 to 2 month target, but you should also allow for the possibility of 157.05 within, I'm going to say, 3 to 5 months. This activity here, this low, high, low, this area is a wide range of rotational waves, and I don't have it illustrated, but if we close above that 116.86 this week, there is a strong case to be made for the possibility of 157.05 within several 3 to 5 months or so. And along the way, of course, this 132.38 able to contain quarterly highs. In other words, third quarter highs if tested. And I do believe that's, I've been rambling on here for over 5 minutes. I do believe that's all that needs to be said. I'll leave you with just emphasizing the fact that through the balance of July, we are two-sided between 116.86 and 102.46. But longer term, into the later third quarter, respect the bearish tendencies for this market. The settlement below 102.46, the likelier outcome by August trade, as opposed to closing above 116.86. But if we close above 116.86, that is a significant upward turning point into the third quarter and even the fourth quarter. And that's really all that needs to be said for this week's coffee analysis.